Hey guys, Mike here. So obviously I had some more good news out about inflation this morning. It is really, a nothing burger because we already knew because of what we saw with CPI yesterday, but it was the producer's price index that came in, lower than expectations, which is a good thing. We're going to get into that. And then get into some things you need to watch out for because right now there is a huge battle between the bulls and the bears, right? We're at these key levels I just told the members this morning about to watch. And I watched it all day, and you can just see what was going on in the market. I'm going to show that to you. And then we'll get into a few other things as well to be watching out for. Some bullish, some bearish, but you can make up your own mind and stuff. And I did run across this, and sometimes I get worried about us as just humans. I mean, I don't know. It's amazing what entertains us now, but this right here I ran across, and I guess it's now fighters tying their hands together across my table and just beating the living breaks off one another. I don't really understand. And anyway, you got PPI data fell about 0.5% in July, which is more good news. And really, you'll see this, and most of this is due to the drop in energy prices, which I showed you yesterday, which is just a huge drop off. And if we go through this on an annual basis, the index rose 9.8%, the lowest rate since October 2021. That compares with an 11.3% increase in June and 11.7% in March, I believe it was. And, looking at this right here, most of the decline came from energy, which dropped 9% at the wholesale level and accounted for 80% of the total decline in goods prices, which fell 1.8%. The index for services rose just 0.1%, so not a lot at all. And so that's a good thing. And this is what I'm talking about, how it filters down to get to us and stuff like that. So again, all of this is due to energy. I mean, you see that plain as day. And so as long as energy stays down and does not start skyrocketing up again, and also if energy continues to decrease, then we should see this improve. If energy rebounds, right, and oil starts heading over 100, 110 again, gas starts going up, then guess what? All bets are off, and your guess is as good as mine, but I think we know what's going to happen here. And here's another image to show you what I'm talking about when I say core CPI is going to be very sticky. You can see shelter right there, and then food from home, which means that your grocery stores, I mean, those are by far your largest problems when it comes to inflation, and rents are going to be hard to bring down. Once again, we'll see what food does. And by the way, if you get anything out of this, please hit that like and subscribe button for me. I really appreciate it. And that leads us into, the bulls and bears fighting out at key levels right now, right? To see if this is actually going to be a bear market rally, which means it just turns down and we head even lower to test the lows again, or do we continue up from here? And the thing that's key is everything I read says that when the S&P falls below 20%, which goes into a bear market, when it rallies at some point and goes up 50%, when it hits that 50% mark, that it never, ever has ever gone back down to break the lows. I mean, it won't test it, but it's never set a new low. And the day we hit the mark of 50%, which I'm going to show you, and this is what I'm talking about when I sent this out to the members this morning, let them know to watch this level, and you'll be able to see it when I take you to the 3-minute chart because you can see it bouncing off of it a couple times there. And, looking at the chart right here, that box, the bottom of it is where we breached that high you see there in June right there. So we end up topping that, went up, and it was 42.32. That's your magic number to watch, okay? And I'm going to go ahead and zoom in here on the 3 minutes. You can see exactly what I'm talking about. And you can see, gapped up yesterday after CPI, boom, broke the June high, rallied up, gapped up again. This morning, went above 42.32. The bears took control then, pushed it back down. Bulls tried to take back control. You can see it bounced right off of there to the cent. And then the bears obviously took control after that. But, looking at something else that's bullish, as a matter of fact, you got the golden cross on the weekly, right, with your MACD right there. You can see it's been a long time since that happened, right, at the bottom down there. That's back in the 2020 crash. And, you look down here, this is the RSI. And once it goes over 50, that is bullish. And you can see on the weekly, that's when you get your runs right there. You can see right there in 2020, as soon as it crossed, boom, we cross a 200, boom. You see the whole run up is over 50, right? And then you can see in 2019, we came out of that run down, crossed over 200, boom, went over the 50 on the RSI. Had a nice big run, only dipped below 50 twice that whole time. Same thing, you see a couple more times where it happened. And so it's bullish when we go above that middle line, which is the 50 point. And that's when we start these runs. And so, we finally got back above it on the weekly. And so that is, two bullish things right there on the charts. We'll have to see where we continue. But I mean, understand, keep in mind what's happened. We had this huge rally. I mean, just enormous, right? You got stocks up huge. And so what's going to be natural? What's going to happen here? People are going to start taking profits because it's like 2020 all over again. You just can't believe what you're looking at. You're like, oh my God, I'm up 50, 60, 100%. Yeah, you almost be a fool not to start taking some off the table, and securing profits is never a bad thing. I think I've said that 1,000 times in 2020, 2021, but people don't want to hear that, because we're so trained as everything long term, and certain stocks are. But when you look at a stock and you go, "Man, earnings were horrible. Man, does this really deserve to be up 100%, or is it just coming up with everything else?" And today you saw some big moves down, 10, 20% on some stocks, because people were taking profits. They knew better. Oh yeah, no, them stocks still aren't any better fundamentally, right? And so that's one thing you're seeing. You might continue to see that. I mean, people take profits. There's nothing wrong with that. I've always said it, especially in a market like we're in now, where it's a lot of uncertainty, right? And I will say this. So to see red today, most of the indexes, I don't know what I'm actually recording, it's like 5 minutes before close. Let me see where we are at, and if we're actually red on all the indexes. Like the SPY's flat, NASDAQ's down some, Russell 2000's green, Dow's green. So you still got some that are in the green right there. And but this is what I would expect to see after a rally like this. And I will say this, I mean, you look at this setup and you're looking at no Fed meeting, no Fed rate hike. I can't imagine they're going to come out now and do a surprise rate hike, right? All the economic data I know that could absolutely derail any movement up is not going to be there till next month in September. So you got this runway of over 2 weeks to do what the market's going to do. And if it can't break above that level that I just talked about, which is the 50%, and actually maintain it now, if the bulls can't take control of the next few weeks, like when are they going to take control, right? Is it going to happen around the Fed meeting when they do another rate hike and start tripling their balance sheet roll-off supposedly? I mean, you know how dramatic in the press soups those things up, and then you got all the presidents coming out from the Fed, and market gets all volatile and stuff. So, it's going to be one of those things that if the bulls don't take control of the next few weeks and are able to push through that level and maintain it, then that makes for interesting times, because September usually is a horrible month in the stock market. And so, that's what to look out for. But if they do take control and are able to maintain that level, then absolutely this rally can continue. It absolutely can. And, a couple things to look at as well is, while a lot of people are talking about how small caps are the better investment, it's basically just got to do with, forward PE ratios, the fundamentals, because everybody's piling into these large caps so much that if you look at it, I mean, look right here. This is historical, right? And so you can see we're around 17, 18 right now after the run up. And you look at everything below that. I mean, there's not many times we've been above that unless we were in a bubble. One was a .com, one we just popped, right? I mean, most times below that. But if you look at the mid and small caps. They've been hammered way more than the large caps. As you can see, I don't think I need to draw the lines, but I will draw the lines for you. Look at this right here. I mean, that's a beatdown. That's where it was, and then we're not that much higher. But look at the small caps. They got all the way down almost to the 08 level. And remember, the financial crisis, we were about to lose the banks, and people thought we were literally losing our financial system when that happened. And just look where we're at now, even with the run. Look at this. I mean, that right there, you're going to talk about, a big difference between small, mid, and large caps as far as fundamentals are concerned. You see where that's why people are saying no, small caps, mid caps are a much bigger opportunity for much bigger returns, because they have just been beat down and hammered, not just this year, almost all of 2021. It started in February for them. And you've seen the Russell 2000 as it traded sideways in 2021 for months, and then it's just been hammered way more than the S&P and the NASDAQ, okay? And that tends to happen. We're going in tightening cycles because it's harder for smaller companies to get a hold of money. They need a lot more to grow, but we'll have to see. I mean, one disturbing thing I read today was, and I looked this up, that in the S&P 500 now, 2 stocks make up 10% of the S&P 500. Do you know what 2 stocks they are? Apple and Amazon. They have such big weights now. They make up 10% of the S&P 500. There's actually 502 stocks on the S&P 500 because there's two different classes of Berkshire Hathaway and two different classes of Google on there. So out of 502 stocks, 2 make up 10%. That is, it's mind-boggling when you think about that. It's also very dangerous when stuff happens, because if something happens to those 2 stocks, it goes to S&P, so to speak. I mean, it's just having that few stocks make up that big a portion is just, it makes no sense. But why is that happening? The institutions, the hedge funds, they're treating those stocks almost like value stocks. They're just rolling into them for safety, right? And so, I mean, what's Apple? I think today it was like $2.75 trillion market cap, I think, if I'm not mistaken. And so, but that's what's happening. And that's why the S&P has held up so well, and that's why those, FANG stocks, I don't want to call them that anymore, but that's why they've held up, because that's where the hedge funds know to go. When trouble happens and you still want to have a tech play, safe place to park your money there. Push it up. Why? Because they got record buybacks. Apple buys back a lot of its stock. Amazon really doesn't, but they did pass a stock repurchase program. I don't think they used any of it last time, so we'll see how that goes. Google purchases a lot of its stock. And so, that's where we're at. It's a safe haven. So if you're looking for safe haven in tech, that's kind of where you're going to go, because the hedge funds are moving there as well, the pension funds and all that stuff. So anyway, that's what I got for you today. Let me know what you think. If we're going to break those levels I talked about on the S&P, maintain them, continue to move higher. Do you think people will continue to take profits? Just curious what you think. And so we'll see what happens tomorrow. I don't think there's any huge news going to come out tomorrow. It's going to shake the market in any way, shape, or form, but you never know, right? I mean, look at Coinbase, down 10% because the SEC, I guess, is investigating them for their staking procedures or something. So you never know what's going to come out in the news. So anyway, guys, I'll see you tomorrow.